So the example we're going to use for this is for December 29th, 2023. So what we're looking at here are all the VIX futures prices for each month, starting with that first one in January, which we will call M1 for month 1. And then each dot further out is the next monthly VIX future price. So we've got M2 for February, M3 for March, and these go all the way out to September. But the next layer to this system is that these are not static. Of course, time is always moving forward. So if I go into my spreadsheet here where I track all this stuff, and we go ahead and find that December 29th date, as we scroll over, we can see that right now there is 11 days left to expiration. Now, also importantly, we can see over here the VIX index on that day was 1245. So now we'll mark the VIX index on here as well at a price of 1245. Now, for the next 11 days, this front month VIX future M1, it will be ticking down to the left towards expiration. And all of the other VIX futures will also be ticking down to the left with each passing day as well. Now, on expiration day, when the front month M1 future has 0 days left to expiration, that price will be exactly the same value as the VIX index. Now, I cannot stress how important this point is. On expiration day, that front month M1 VIX future contract will be the same value as the VIX index. What happens next is that front month M1 VIX future expires. It is removed from the board completely. And then the following day, the future that was the M2 before expiration now becomes the new front month M1 VIX future after expiration. The old M3 becomes the new M2, M4 becomes M3, all the way down the line, and the new cycle begins. Now, because it's a new cycle, these futures are free to move around. People are still making their bets, so this new M1 future will decouple from the VIX index again. You can see if the term structure remains stable, it's not going to be the same price as the VIX anymore. There may be around 20 days in this cycle, and each day all the futures are ticking towards expiration again. So you can see what's happening here. You've got all the VIX futures priced out into the future, and then with each passing day, they are all ticking down to the left as time goes by. On that expiration day, just for that moment, that front month M1 future will equal the VIX index. Then it expires, it drops off the board completely, all of those futures move down to the next month, and the cycle begins again.